Building a $10,000 per month dividend income stream is an ambitious financial goal, but it's entirely achievable with a solid plan, patience, and discipline. Dividend investing is one of the most reliable strategies for generating passive income, but it requires careful planning and long-term thinking. In this video, I'll share the exact steps of how to build such an income stream, sharing key strategies, mindset shifts, and practical actions that can help you reach your financial milestone. The first step toward building a $10,000 per month dividend income stream is to adopt a long-term mindset. This is not a get-rich-quick scheme, and the road to achieving your goal requires time, consistency, and perseverance. Many dividend investors start with relatively small investments and reinvest their earnings to accelerate the growth of their portfolio. This snowball effect allows your investments to compound over time. Dividend reinvestment plays a critical role in growing your capital base, which in turn increases the size of your dividend payouts. To generate $10,000 a month in dividends, you will first need to identify high-quality dividend-paying stocks. Not all dividend stocks are created equal, and it is crucial to focus on companies with a history of consistent dividend payouts, strong financial health, and a commitment to shareholder returns. Companies in sectors like utilities, consumer staples, healthcare, and financials are often known for their dividend-paying capabilities because they tend to generate steady cash flow. When selecting stocks, it's important to consider both the dividend yield and the dividend growth rate. While high-yielding stocks may seem attractive, sustainability is key. Some companies may offer high yields, but are at risk of cutting dividends if their cash flow declines. On the other hand, stocks with modest yields but strong growth potential can provide larger dividends in the future as the company increases its payouts. It's also critical to build a diversified portfolio. By spreading your investments across different sectors and industries, you mitigate the risk of any one company cutting or eliminating its dividend. A diversified portfolio ensures that your income stream is more stable, even in the event of market volatility. Overexposure to any single stock or sector can leave you vulnerable, so it's wise to maintain a balanced approach. The number of dividend-paying stocks in your portfolio should vary based on your risk tolerance and investment strategy, but generally, owning between 20 and 30 high-quality dividend stocks across a range of sectors can provide a solid foundation. One of the essential components of building a $10,000 per month dividend income stream is capital. To achieve this level of passive income, you need a substantial portfolio size. While the exact amount of capital required will depend on your portfolio's average dividend yield, let's assume an average yield of 4%. At this rate, to generate $10,000 per month, or $120,000 per year in dividend income, you would need an investment portfolio worth around $3 million. Of course, this figure changes depending on your yield, so if you can achieve a higher yield, you may need less capital. Conversely, if your portfolio yields less than 4%, you will need more capital to reach your goal. Reaching a $3 million portfolio may seem daunting, but it's attainable with a disciplined savings and investment strategy. Start by maximizing your contributions to tax-advantaged accounts like 401(k)s, IRAs, or Roth IRAs. These accounts offer tax benefits that can accelerate the growth of your investments. Additionally, make use of any employer matching contributions, as this is essentially free money that helps grow your portfolio. Outside of tax-advantaged accounts, you can invest in dividend-paying stocks through brokerage accounts or online trading platforms. It's essential to automate your contributions, setting up automatic transfers to your investment accounts every month. By consistently investing a fixed amount, you benefit from dollar-cost averaging, which can help reduce the impact of market volatility over time. A vital part of building this income stream is reinvesting dividends in the early stages of your plan. Instead of taking cash payouts, you can set up a dividend reinvestment plan, which automatically reinvests dividends back into the stock that paid them. This allows your portfolio to grow faster, as both your initial capital and the dividends you receive work together to compound your returns. Over time, the compounding effect can significantly accelerate the growth of your portfolio, allowing you to reach your dividend income goals sooner. Once you're closer to achieving your target income, you can switch from reinvesting dividends to taking them as cash payouts. It's also important to be patient and stay focused on the long-term picture. The stock market can be volatile in the short term, but over the long run, high-quality dividend-paying stocks tend to deliver consistent returns. Avoid the temptation to chase after speculative investments or try to time the market. Instead, focus on finding stable, dividend-growing companies that can continue to generate income for you over many years. Successful dividend investing requires the discipline to stick to your plan, even during periods of market downturns or economic uncertainty. Another key strategy to build a $10,000 per month dividend income stream is regularly increasing your investment contributions. As your income grows over time, it's essential to increase the amount you're investing. This may require some lifestyle adjustments, such as cutting back on non-essential expenses, so you can direct more money toward your investment portfolio. Each additional dollar invested gets you closer to your goal. Additionally, if you receive windfalls like bonuses, tax refunds, or inheritance, consider directing these funds toward your dividend portfolio instead of spending them. Managing your portfolio efficiently is also a critical part of building a successful dividend income stream. It's essential to monitor your investments regularly and ensure that the companies in your portfolio are still financially sound and committed to paying and growing their dividends. However, this doesn't mean you need to check your portfolio daily or make frequent trades. Instead, aim for a more strategic approach, reviewing your holdings periodically to assess the health of your portfolio. If a company's fundamentals change or its dividend becomes unsustainable, you may need to consider selling that stock and reinvesting in a more reliable dividend payer. You should also stay updated on tax implications, as dividend income is typically subject to taxes. In the US, qualified dividends are taxed at lower rates than ordinary income, but non-qualified dividends can be taxed at your regular income tax rate. Understanding the tax treatment of your dividends and incorporating tax-efficient strategies into your investment plan can help maximize your after-tax income. For example, holding dividend-paying stocks in tax-advantaged accounts can minimize your tax liability, allowing your investments to grow faster. Another important consideration when building a dividend income stream is the potential impact of inflation. Inflation erodes the purchasing power of your income over time, so it's critical to invest in dividend stocks with a history of growing their payouts. Companies that consistently raise their dividends can help protect your income from the effects of inflation, ensuring that your purchasing power keeps pace with rising costs. Look for companies with a track record of increasing their dividends annually, even during challenging economic times. As your dividend portfolio grows and you begin to approach your $10,000 per month income goal, it's important to develop a strategy for when you transition from reinvesting dividends to living off your income. At this stage, you will likely want to shift your focus from growth to income stability. This might involve reallocating your portfolio into more conservative, high-yielding investments or dividend-paying stocks that provide more consistent payouts. It's also wise to build an emergency fund or cash reserve that can cover living expenses for 6 months to a year. This cushion will protect you from having to sell stocks during a market downturn to meet your living expenses. Once you've built your dividend income stream, the sense of financial freedom it provides is profound. Having a reliable source of passive income means that you can cover your living expenses without having to work for an employer. This doesn't necessarily mean you'll stop working, but it gives you the option to work on your own terms, pursue your passions, or even retire early if you choose to do so. Dividend income can also provide financial security during retirement, supplementing other income sources like Social Security or pensions. So, building a $10,000 per month dividend income stream requires time, discipline, and a well-thought-out strategy. By focusing on high-quality dividend-paying stocks, reinvesting your dividends, consistently contributing to your portfolio, and maintaining a long-term perspective, you can achieve your financial goals. While it may take years to build a portfolio that generates this level of income, the rewards of financial independence and passive income are well worth the effort. The key is to stay patient, avoid distractions, and stick to your investment plan. So, what do you think of our video? Let us know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.